Here's the problem. Too much money, too much power, too much technology, too many people thinking that they were put on this earth to help.
Right.
Right? Large ego, large power, large capability. And when a random storm, like any other storm for the past 100,000 years occurs in that environment, it's like a powder keg and it goes unstable, right? You're triggering the dysfunction. And I think that that's one of the artifacts of modern technology, that we've created systems that are so powerful and so intertwined that you trigger these things. And it's a reason why we could all do with some humility and some respect and appreciation for classic Austrian economics. Let the market decide, and then also just decentralization.
MicroStrategy Executive Chairman Michael Saylor believes Bitcoin is a solution to the problem of centralized power. As a decentralized currency, Bitcoin is not controlled by any single person or institution. This decentralization protects Bitcoin from censorship and manipulation attempts, giving individuals greater control over their finances. Saylor views this as a truly revolutionary concept poised for exponential growth. He predicts that eventually, every major financial market or country will have its own Bitcoin ETF tailored to its regulatory and economic environment. This widespread adoption is expected to lead to significant institutional investment in Bitcoin worldwide. We will now show you more clips from the interview. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
If you step back and ask more deeply, what is Bitcoin? Well, Bitcoin is digital money. What is money? Money could be a store of value, a medium of exchange, or a unit of account, but the aspect of money that's a medium of exchange is currency. And the aspect of money that's a store of value is capital. More like property, but especially capital. Most people don't really think about a form of money and capital because we haven't really had a strong money as capital since the gold standard. The closest thing would be when you could hold gold as your capital asset and then you used notes or paper currency that was pegged to gold or some other currency as a medium of exchange. But if you think about Bitcoin as digital capital and you think about the dollar as currency, once you understand that, you see, well, currencies are medium exchanges, and the thing you need in a medium exchange is it needs to be legal tender because you need to be able to transfer it tax-free. And of course, the dollar is the world reserve currency, and then other countries will have their own currencies. There'll be the euro, the CNY, the peso, etc. Any country that's an effective nation state will have their own currency, and when the nation state is failing after a war, it may dollarize. It may, nation states will adopt the euro in lieu of their own currency when they can't support one, or they'll adopt the dollar, or they'll adopt CNY. And so there's 120 currencies, but there's 180 or more countries, right? So there's nothing exciting going on there right now, with the exception that people are creating digital currency in the form of stable coins like Tether or Circle, and in a country with a collapsing fiat currency like Argentina or like Turkey or Lebanon, you would prefer the digital currency stable coin because that dollar looks like a store of value to you. If you understand Bitcoin as digital currency, your reaction is immediate and negative and ignorant and inflammatory. If you simply turn the narrative and say, hey, it's digital property, you're going to buy it instead of buying a building. And that's a very simple thing. It's like you have $10 million, you live in Africa. You can buy anything in Africa for $10 million, any company, any building, any land, any set of commodities, any bonds. But the catch is you have to keep it there for 100 years.
Right.
Or you can buy Bitcoin. What would you buy in Africa that you would prefer to owning global digital property that you could take with you? And the answer is nothing.
Of course.
There's nothing you would buy, and there's no country you would buy it in. Nothing. You wouldn't buy a diversified portfolio of anything, right? And so that illustrates a point, and the point is Bitcoin is digital capital, it's global capital, and it conveys the same property rights to a business person or an individual in Africa, an individual with $100, a business person with $1 million, a billionaire with $1 billion. They all have a government. They all have the same property right, the same opportunity as a billionaire in Manhattan, as the King of England, as the royal family in Dubai, right? Now, if I took Bitcoin away from you and I put you back into Africa and I said, okay, now you can't buy Bitcoin. Now I can buy the best hotel I can find in Nigeria. Hold that for 100 years. Good luck with that. But there's nobody in their right mind would say that investment seems as high quality as buying, the best portfolio of stocks and holding them in the Upper East Side of New York City. Right? Just not as good. Bitcoin is digital property, but it's got a lot of characteristics that are better than physical property. And it's kind of difficult to break up the building into 100 pieces and then recombine them together next week. But Bitcoin is fungible, it's liquid, it's global, right? I can move it at high frequency. And, the building you bought in London, well, okay, you bought $1 billion building. Can you buy 99 more buildings that are equally valuable also in London? Can you do that this year? Well, they're not fungible, right?
No.
Right? Every building is different than every other building. People will say, well, that building is on the end of the street corner, and this other building that looks exactly the same is only worth half as much.
Right.
And if I'm the mayor and I change the traffic pattern, I can devalue your building.
Correct.
So Bitcoin is universal, global, fungible, standardized property, and it's digital. A computer can move it around. And that's why it holds such a global appeal to everybody on the planet, no matter, you want to buy $20 worth of a building? Good luck with that.
Yeah.
You could buy $20 Bitcoin. You can work your way up to $1 million of Bitcoin, $20 increments. And when you get to $1 million, it's not devalued. Try buying a building $20 at a time.
It's not possible.
Right? You're not going to buy $1 million building $20 at a time. So Bitcoin offers property rights and it offers this digital capital to 8 billion people. At scale, they can buy with their weekly paycheck, and it works whether or not you're working class, middle class, upper class, a pension fund, megacorp, little corp, nation state. Everybody has the same exact asset. They all have the same benefit.
In other news, renowned Bitcoin analyst Willy attributes the recent drop in Bitcoin's price to $58,000 to speculators opening new long positions, which led to a series of liquidations. Wu also notes that Bitcoin miners have been selling more BTC to afford hardware upgrades following the halving event, which reduced block rewards to 3.125 BTC. This selling pressure, particularly from weaker miners shutting down, contributed to the price decline. In a June 24 post, Wu predicts a price rebound, suggesting that the exit of weak miners will ultimately strengthen the market. However, he warns that Bitcoin needs to purge futures open interest before a sustained price increase can occur. Currently, Bitcoin trades between $61,000 and $62,000, with Wu identifying $54,000 as a potential next layer of liquidations, though he sees this as challenging to reach given the current market structure. Now, let's get back to more of what Michael Saylor has to say.
When the ETFs were approved in the U.S., there was a whole set of institutional investors like pension funds and hedge funds with $50 billion, $100 billion, $200 billion. They have a lot of capital, but they could only buy through the ETF.
Right.
Even if they wanted to work for a year to set up all these other systems, they're not allowed to. Their charters prohibit them. So they've got a compliance problem. And then what happened is an ETF launched in Hong Kong. Well, you can imagine if you buy Bitcoin in that ETF in Hong Kong, that Bitcoin is not being custodied in the United States. The Hong Kong financial system prefers the assets to be custodied at a regulated bank in Hong Kong. So if I'm a Hong Kong investor or a Hong Kong institution or a Hong Kong company, I could funnel money into Bitcoin via the Hong Kong ETF. Now the rumor is that there'll be ETFs in mainland China. Well, those ETFs will come to you via a Shanghai-based financial institution, and the Bitcoin will be custodied in a Chinese mainland bank, maybe in Shanghai. There's 1.5 billion people in China that want to buy Bitcoin. The Chinese government doesn't have an objection to them getting rich. It doesn't have objection to China getting rich. They all like money.
Yep.
They all like wealth. Their objection is they don't want people to take more than $50,000 a year in capital outside of China.
Yes.
So if you buy $10 million of Bitcoin, put it in a hardware wallet, and leave the country, you violated the capital controls. But if you buy $10 million of Bitcoin via an ETF in Shanghai, and the Bitcoin is then purchased by the exchange and custodied in China, the Chinese banking system benefits, the Chinese currency benefits, the Chinese culture benefits, the Chinese government gets their taxes, the Chinese investors get Bitcoin. And so the real significance of the ETFs is they're solving the problem of credit access, compliance, accounting, convenience, reporting, and presumably there's going to be a different one in every city in the world or every country in the world. You know, if whatever nation, if the Saudis want Bitcoin to stay in Saudi Arabia, they'll have an ETF in Riyadh. The Emiratis will think, well, maybe we'll keep one in Dubai
So you
or Abu
think we're
Dhabi.
going to see that avalanche continue?
There's already 34.
Wow.
34 holding more than a million Bitcoin. So I think we'll keep seeing a spread. I think you'll see an ETF in every country. And one more point I'll make, a very powerful, important point. If you're a rich person and you live in Alabama and you buy $27 million of property in Alabama, there's nothing anybody in Israel is doing to increase the value of your property in Alabama.
That's right.
There's nothing going on in Moscow or Dubai or Abu Dhabi or Singapore or London to increase the value of your property in Alabama.
That's right.
You're making a local investment. When you are that same person and you buy $27 million of Bitcoin in Alabama, there's a person in Singapore that comes up with an idea for a trade that's illegal in Alabama,
Yep.
that you couldn't do if you want to. That guy builds $10 million of equipment, borrows $10 billion worth of Bitcoin, does the trade, and triples the value of Bitcoin, and you triple your money because
Thanks to
somebody somewhere else in the world came up with an idea you didn't know about, you weren't capable of, and legally you couldn't have done. But that's
something
the
that connects
power
us now.
of being connected into the global economy.
Right.
And it works the other way. The guy in Singapore benefits from what's going on in Paris and London and Dubai and Abu Dhabi and what's going on here in Prague right now. Everybody's working for everyone in a network that's mutually beneficial to all participants.
Saylor points out the launch of a Bitcoin ETF in Hong Kong and discusses its implications.
Saylor highlights the introduction of a Bitcoin ETF in Hong Kong and discusses its implications. He notes that when investors buy Bitcoin through a Hong Kong ETF, the Bitcoin is held in custody by a regulated bank in Hong Kong, ensuring compliance with local financial regulations. Additionally, he speculates about the potential for Bitcoin ETFs to be launched in mainland China. If this occurs, these ETFs would likely be managed by Shanghai-based financial institutions, with Bitcoin being custodied in mainland Chinese banks. This setup would enable Chinese investors to purchase Bitcoin while adhering to Chinese regulations. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.